2023 has brought a lot of interesting changes to the DFW real estate market. We're coming on the tailwind of a declining market at the end of 2022, and while we've seen the market start to heat up, things are going to get very interesting as we move into the rest of the year. This is your DFW real estate market update for April of 2023. Let's dig into the numbers. So first and foremost, I want to talk about interest rates because this is what is driving the market and buyer demand right now. Now, that's not shocking news to anyone. The way the interest rates have changed over the last year is really driving what buyers are doing, and so also that is affecting what sellers are doing. Since most sellers also need to buy a house before they can sell their own, this is a huge driver in the market right now, not only for buyer demand, but also for available inventory for those buyers. So the first graphic I want to show you is showing you how demand is really being affected by the interest rates. Now, this is last updated April 4th, and you can see while March we dove high into February into March, we really went up into the high sixes, low sevens, and then started to come back down as we approach April. We really had a slowdown in the market in most of March. Now, as we go into April and towards the end of the year, we are expecting, most economists are predicting that interest rates will continue to fall. Now, we've seen through April so far a trend of those falling rates, and that is expected to continue. And as that does, buyer demand will increase. And these rates are directly influencing affordability in the market, which is what I want to show you next. I like this quote from one of the economists from Realtor.com, basically just showing you that every time the mortgage rates take a step down, a little downward tick, buyer demand is shooting up. Now, I know I'm beating a dead horse here. As the rates continue to tick down and affordability goes back up, more and more buyers are going to enter the market. We are expecting to see a rush to the market. As the rates get down below 6%, we are starting and expecting to see a lot of buyers re-enter the market that have been waiting. When this happens, the market will start looking a lot like it did in early 2022 with multiple offers, multiple bids, and homes selling well over asking price as more buyers are trying to buy these homes. Let's talk about affordability. The graph I'm showing you now is taking a look at historic affordability since 1990 to today. When you look at this graph, the dotted line is telling you that median income exactly meets the median home price. So that's where affordability is almost right in the middle. Now, of course, we'd like to see that a little bit higher. And so as the bars in the graph go higher, the more affordable it is. And you can see during the real estate crash, we got extremely affordable pricing, but this was driven by distressed properties. Foreclosures, short sales, and things like that are what were driving affordability at that point. Mainly, of course, pricing. Rates were still pretty good then, but not as good as they were in the last decade, which is what helped keep affordability high through 2010. Interest rates have been what really have been driving affordability for us. As those dropped, and even as home prices went up, they balanced each other out and they kept us at very affordable levels, obviously right up until the last 2 years as home prices shot up and then interest rates shot up. Instead of helping balance each other out, they helped multiply it and affordability plummeted in the last couple of years. So let's zoom in on those last couple of years. So here is from January 21 through January of 23. It's the latest data that we have at the moment. And you can see, obviously, in January of 2021, it was much more affordable to buy a home than it is today. So we saw this start to dip as prices got worse and worse through the pandemic. And then as interest rates spiked last year, you see it get even worse. And not shocking, at late summer, early fall last year is when we saw it get as bad as it got. As interest rates topped out and home prices had been soaring before they started coming back down, this was the most affordable months. And then, of course, this is nationwide. I don't have the data for here locally, but the trends match pretty closely with what we're seeing nationally. The good news here is that affordability is getting better. You can see that since it topped out in October of last year, or should say bottomed out, the affordability has been getting better steadily. Now, I know that if we look at February, March, and April, that should continue to be getting better. March might show a slight decrease in affordability. Interest rates did come back up at that point, like we saw earlier. But overall, we are seeing affordability continue to get better. This is not only driven by the dropping of the interest rates dropping, but also income is getting better for a lot of people out there. Hopefully it's for you as well, but that's what we're seeing help drive affordability. And lastly, when I talk about affordability, what does this really mean? What it means is the person making the median income, can they afford the median house? Hopefully there's a large gap between those two. But I like this graph because it also shows how local affordability can be. And when I talk about national trends, we are looking obviously at the entire nation, and one section out of whack, like out here on the West Coast, can really affect what it looks like for the whole nation. So the West Coast is the least affordable place in the nation right now, and that is probably shocking no one, while the Midwest is the most affordable. Again, more likely shocking no one. The South, I think driven by Texas and Florida, that gap is getting more narrow as home prices in both of those states go up. So affordability comes down, especially as the interest rates got higher over the last 6 months or so. So as interest rates keep dropping, affordability should hopefully get better, but we got to be careful because we're going to also see the sales prices going up. And that's what I want to talk about next is our sales price and appreciation. So before I get to the actual sales prices, I want to talk about appreciation because this is something I hear a lot about, and I think there's a lot of misinformation happening between not only the headlines, but people like to share anecdotal stories that may be true one-off, but don't really apply to the whole market. So I want to show you 3 different graphs of appreciation with 3 different perspectives. Now, the first one is our month-over-month appreciation. This measures the appreciation from last month to the current month and all the way down. So when I'm looking at the month of December 2020 to January 2021, we're seeing a large spike in appreciation and then back down. And it can look fairly volatile when you actually look at it month to month. And keep in mind, this graph makes them look much larger. We're looking at at most a negative 4% appreciation month over month, and at best a plus 7% appreciation month over month. And as we go, we see that our big months here, starting in February of 2022, we took some really big jumps across the DFW Metroplex in a price appreciation. And then as the interest rates got worse, we're starting to see that drop again. Again, shocking no one that the last half of 2022, we saw a lot of negative price appreciation across the marketplace month over month. And now, as we get back into 2023, we are starting to see positive price appreciation again. Now, this might change a little bit here and there, but we are expecting the trend to continue with positive price appreciation month over month. So the year-over-year price appreciation is a little bit more stable. It's not quite as erratic because we're looking at the year previous month. So if I'm looking at October, or what is this, April of 2022, I'm comparing that to April of 2021, and we would hope that our prices have gone up 12 months over 12 months from there. But as we can see, as we got into, again, the early parts of last year, that was a huge gain, upwards of mid 20% range year over year, which is, for our market, very high. And as we look at that, that started dropping as of last year. And as we get into the early parts of 2023, it looks like we are seeing negative price appreciation. But you have to remember, we are comparing that to all-time highs in price appreciation. So yes, if you bought your house, unfortunately, last year about this time, in March, April, May of 2023, we expect to see negative price appreciation, possibly all the way through June or July, because we're comparing that to last year's super big price appreciation. So while we see this negative here at the tail end, we're going to expect to see that year over year. But if we take a larger look out and we start comparing to 2 or 3 years, it looks much different. So this next graph I'm showing you is the median sales price 2-year versus the 1-year appreciation. So this is a smaller version of that same graph you saw right there, is that blue line, and you can see it dips negative right at the end, just like my last graph. And while you're seeing the price appreciation slow down on the 2-year graph, we are still looking at a 20% gain over the last 2 years here in DFW. Now, that trend may still continue as you see it, because as we continue to see the price go up this year, that will still be a gain over 2 years ago. And if we zoom out to 3, 4, or 5 years, that gain looks even better because the last couple of years have been very good for price appreciation. I want that to sink in, because what you should be taking away from this is that yes, prices have dipped from the peak last year, but depending on when you bought your house, you are still sitting on a lot of equity and your home is still worth more than you bought it for. If you did buy close to or at the peak last year, your house may not be worth quite as much as you paid for it, but as prices continue to go up, we are hoping to see prices get close to that mark again this year, and then through next year, they should be surpassing that. So as long as you have a long-term mindset, you should be fine. 5 years from now, your house very well should be worth more than it is now, which is positive news for you in the long term. As we talk about affordability and pricing, another very important factor when you're looking at the real estate market is the velocity of sales. How fast are homes actually selling? Well, when we look at that, there's really 2 great ways to measure this. The first is days on market. And what you're seeing here is a graph, if I make it even bigger, that's showing days on market and how it is usually seasonal. It rises in the fall and winter months and then drops in the spring and summer months. Last year's where you saw small dips and rises seasonally, but the demand was so hot that it really just stayed low all of last year until the interest rates went up and then they spiked. We're looking at right now, currently, as you can see, about 25, somewhere between 18 and 30 days on market. You can look at the 4 major counties of DFW. What we're seeing here, and these are flat versus small gains from last year. What we're seeing though is that these are decreasing again. They peaked in December and January, and they have been falling steadily since then to get back to a point where we are seeing homes sell in possibly the first weekend or within the first 2 or 3 weeks of listing at the most, if they are priced and marketed correctly. Now, will be homes that take much longer to sell, and there will also be homes that will sell, like I said, probably in the first weekend, but we're seeing the averages continue to drop steadily throughout the 4 major counties of DFW. This is good news for sellers and potentially bad news for buyers. We're getting back into the mode of having to be very quick to go see houses and make offers for buyers, which could not only limit their options, but could also make it so they have to make decisions that they may not have normally made just to be sure to get the house under contract quickly. The second number I really like to use when I'm talking about velocity of sales is our months of supply across the DFW Metroplex. And what this is measuring, it's taking a few things into account, like our days on market and our inventory levels and a few other factors. But basically, if no new listings hit the market, how fast would everything currently there sell at our current pace of sales? So this is the number a lot of economists will use to tell you whether we're in a buyer or a seller's market. Now, I don't love that measure for buyer or seller's market, but I do think it is a good indication when you look at the trend of what's happening and how fast things are moving. Because it not only is telling you how fast they're moving, but how much inventory there is. So when you're looking at this, all of these numbers are below 2. And they are all still higher than they were at this time last year, because last time we were at historic lows. So February and March right now of 2023, when I go look at March of 2022, they were all under 1 month of supply. Right now we're close to 2 months of supply, but the trend is downward. So we peaked back in October, November of last year, and since then it has been trending downwards. And we saw kind of a plateau between February and March this year. As more homes hit the market in the spring months, we tend to see this actually increase. More homes go to sell, and then lagging behind that buyers are entering the market and they're selling, because you got to remember it takes 30 to 45 days normally to close on a house. So these numbers will reflect current inventory levels at the time, but as we go forward, this will drop again as we get closer to the fall. And that's why you see this up and down. More homes hit the market in the spring, they go under contract, and then they start closing in the mid, late summer, and then fall. And as the fall rolls on, we see these numbers drop as less homes hit the market. So all that to say is this is a little bit of a seasonal number, and this is normal for this to drop right now, but we should see this go back up, and it's dropping a little sooner than it normally does. To wrap all of that up in a nice, neat little bow is DFW has a lot of buyer demand that has been artificially suppressed with these high interest rates. There's a lot of people that want to buy a house and haven't been able to afford it because of the interest rates. Now that interest rates are starting to drop, we're going to see more buyers hitting the market. As soon as these rates get right around 6, somewhere maybe even closer below 6, mid 5s maybe are being predicted by July or August by some economists and mortgage people that I'm talking to, we could see a huge amount of buyer demand, and we could see all of these numbers, the days on market drop below a week again, the months of supply drop below 1 again. It's going to be a little bit of a feeding frenzy, which means it'll be a great time to sell, but if you also have to buy, there could be some challenges. If you are in this position, we have programs to help. We have a buy before you sell program and a few other things that can really help you out in this situation. And we have a great track record, especially last year, of getting people under contract even in a difficult marketplace. So if you're thinking about selling or buying soon, please reach out to us and we can have a free strategy session to go over your options. That is the April update. I hope that you got some good knowledge out of this and feel a little bit more informed. My ultimate goal is to make sure that I provide valuable, relevant, and factual information to all of my clients and people near me so they can make the best possible decision for their family and themselves. I love to answer questions about real estate, so if this has sparked anything that you'd like to ask, please reach out to me either in the comments or directly using my contact information. I would love to speak with you about buying or selling. If you have any questions about the data in general and just curious, I'd love to talk about that too. So thanks and have a great day.